Obviamente con él vamos a querer conversar qué es lo que está pasando desde el punto de vista macro. Obviamente ya se lo vamos a poner, es una firma sumamente importante e interesante y efectivamente creo que ya lo tenemos allí en la pantalla. Fíjese bien, este señor trabaja, Matt, give me just one second, este señor trabaja en uno de los bancos más importantes y su labor es siempre tratar de hacernos entender hacia dónde pudiese ir el mercado. Él es básicamente el que habla con los clientes y con las familias, pero de una firma importante que se llama Raymond James. Él habla con inversionistas como los que está aquí y tiene un pulso del mercado. So now me voy a cambiar a inglés y voy a tratar de cambiar a inglés en español. Matt, I'm going to try to do Spanglish because obviously my audience is speaking español and you're going to have subtitles. But at the end of the day, Matt, unfortunately we couldn't have a communication, some sort of in our last conversation because of technical problems.
Yeah.
Now I want to ask you, what do you think about the market, Mr. Orton? Because at the end of the day, a lot of people that I've been speaking today, and you know the money show pretty well, are saying that we might go higher while the other half are telling me, Victor, we might go lower. So I want to hear what the guy out of Raymond James have to tell the audience. And thank you for coming, Matt, again.
Of course. Well, first, Victor, thank you for having me. And at the end of the day, two sides make the market. I'm biased for the market to continue to go higher longer term. We've had a really strong rally off the lows post-Liberation Day, perhaps a little bit too far too fast. So there might be a little bit of indigestion with respect to just how far we've gone with optimism, but I don't think it's misplaced. I think that when you look at economic metrics, the economy remains strong, earnings have come in much stronger than people expected, and when you listen to CEOs, you're not hearing anything about a recession. What you're hearing is that they're able to navigate this uncertainty. And the more trade deals we get, the more pivots we see, the more the administration listens to the market, I think we set ourselves up for a really strong rally heading into the end of the year. So I'm biased to use downside opportunistic.
So let me ask you something, because I've been asking most of the speakers here at the conference where they see the S&P closing at the end of 2025. And you know, before you answer, several other firms has been reviewing and already telling us what's going on. And I know that several others are basically reviewing this as we speak, and they're gonna come out with information before the end of May. But Raymond James, based on Matt Orton, where do you see the market closing in 2025, the S&P 500, Matt?
So my price target heading into 2025 was 67.50. I have not adjusted my price target for the year. I've said there's definitely risks for that to miss on the downside, but given a lot of the pivots we've seen, given the fact that earnings revisions haven't been as significant as we thought, I still think there's a path to get there. So I'm still not in a position to change where my early year price target was to close this year. I think a lot of things can still go right for this market, especially around AI. And we're seeing a lot of those AI names, the bigger mega cap tech names, continue to deliver in addition to banks, which have been working well. And even though we talked about the S&P 500 here, there's still a lot of opportunities outside of the US as well. My biggest message to clients is to continue to lean into the US, but look for opportunities to diversify your portfolio because there's a lot of parts of the global markets that are working well for the first time in the past 15 years.
Listen, give me 1 second so I can tell them in español because it's extremely important. Una de las cosas que nos está diciendo él, que precisamente es uno de los mejores analistas que hay, de una de las mejores firmas que es Raymond James, eso no es ningún secreto para nadie. Número uno, es que él sigue optimista, sigue pensando que hay que diversificar esas ciertas áreas donde pudiesen existir cualquier tipo de posibilidad. Recuérdense ustedes que tanto Matt como muchos de los amigos, inclusive Tom Lee, para decírselo, que Tom es uno de los que más siguen, sigue diciendo que el mercado va hacia arriba. De hecho, Matt, para que también tengan una idea, dice que el mercado podría cerrar en 6.750. Eso quiere decir que probablemente estamos un 12% por encima de donde estamos. Matt, you are pretty bullish. I'm glad you are in that bucket because obviously I'm super perma-bull as well. What do you think are the problems that you realize out there that can create everything worse to worse? ¿Qué puede pasar que traiga el mercado hacia atrás? What do you think it might happen in these next 2 quarters, specifically when you see, and I've been telling that, Stevie Cohen, Jamie Dimon from JP Morgan, and also Paul Tudor John telling us that we might revisit the lows. So what do you think about it? What it can derail this, man?
So The biggest risk, Victor, is how tariffs without trade deals are ultimately going to feed into inflation, right? You heard Walmart earlier this week talking about the fact that they are eventually going to have to raise prices. They don't know exactly when, they don't know about how much, and it's that pervasive uncertainty that becomes a problem if it's left to continue in perpetuity. So the more certainty we can give corporate management teams, the more they can start to make investments in it. And I think we're trying to get there. I'd like to see the speed of trade deals move a little bit quicker because there's a lot of decisions that are being put to the sidelines that eventually will feed through to the economy that could cause earnings to weaken, at least in the short term. So in order to revisit the lows, all of that has to happen at once. That's not my base case for the market, but it's certainly a real risk. And again, that's why diversification, leaning into different parts of the market where there's durable growth themes, that's why that has worked well so far, and I think will continue to work.
One of the other questions, I'm assuming people is asking you directly, I mean, not the clients, but the, let's say, wealth manager. Remember, your firm have a cascade of wealth managers that at the end of the day do the allocation and gather the assets from families and high net worth individuals. What do you tell them when they ask you about the Bitcoin? Bitcoin is being, whether you like it or not, a very important topic and discussions out there. Where do you think we might go for the Bitcoin, while there is people here in the conference that are telling me that we might go super higher, incredible numbers for 2025?
So I'll start first, Victor, by saying we don't directly invest in Bitcoin ourselves, so that'll be my caveat for this, but I do follow it. And when I follow it, when I look at Bitcoin the most is how much of a risk barometer is it. I think it's a very good indicator for the risk appetite of investors in the overall market. It's hard to say Bitcoin's a true decorrelated asset, that it's going to be the global reserve currency, but it's a legitimate commodity, in my opinion, for trading. And commodities represent investor sentiment and supply and demand. And so the strength of Bitcoin says to me that a lot of this optimism in the market, the rally we've had, is founded in the fact that investors are getting more optimistic about the prospects of the economy, of the market, and are willing to put money to work. So again, that's a more positive signal to me about just where the market overall and a lot of different asset classes can go.
Listen, understood, fair enough. Now the other question that I think you have a tell about it is the fixed income. You know, you have the 10 years stubborn between 440, 450, and you hear the guys from the Federal Reserve, Bolstick, I think, was one of the governors saying that they only might gonna cut one more time in 2025. Do you think we might go higher? Do you think that the reconciliation discussion in the Congress will create friction in the fixed income area with interest rate, and we might go to 5%? Or do you think we're more closer to go to 3 something, 4% in the 10-year in this 2025?
So I'm biased that we're going to stay in a range. I came into this year with a range of 420 to 485. Anything out of that, I would buy or sell. I still think that remains the case. I'm biased for rates to move lower over the long term. Even though there's term premium, there's worries about the potential inflationary impact of tax policy. At the end of the day, there's still demand for U.S. assets. There's still demand for fixed income. Investors still need to lock in yields, so I suspect there's going to be some really good value appetite if you push close to 5% again. So that's going to help keep a lid on how high we go. But the Fed eventually is going to start to cut. Inflation is going to come down. I don't think we see more than 1 or 2 cuts this year, but I think they're going to be able to cut into 2026, not because growth rolls over, but because inflation moves closer to target, which is what we were thinking heading into this year. So that can help bring rates down as well. So longer term lower, in the short term, I think we stay in range.
I love the way you explain, the way you talk, you articulate perfect, and it's something that we like here at the Tribune because people is seeing your subtitles. And I gotta finish with this question, which is important because it's gonna end up affecting what you just say and inflation. Where do you see the oil barrel moving in this? What is your base scenario for 2025? Because I've been listening here 40 something, because probably we're going to do a deal with Iran, and they say, which I don't believe, we're going to do a deal with Venezuela. So what do you think it might happen on that regards? Or do you think the oil going to keep going to 60, where the Saudis want the oil so he can keep funding the deals in the US? What is your base scenario for the oil, Matt?
Yeah, my scenario is we end up probably somewhere between $65 to $70 a barrel. I'd be even biased to see it a little bit higher because, again, global growth isn't collapsing. We're seeing growth from China. We're seeing growth from the U.S. India continues to grow at a rapid clip, and they are huge consumers of oil from around the world. So demand is there. Supply is picking up. But I think the supply and demand imbalance isn't as big as people think. And as a result, that will allow oil prices to stabilize something in a more normal range than where we have been over the past couple of weeks.
Listen, thank you for coming. Thank you for making the time, the persistence to overcome the technicalities, problems that we faced last time. We're going to keep inviting you because we need your some sort of comments about the market. Thank you very much. We love your firm, and we're going to get you back, man. Thank you. Happy Friday. Happy weekend.
Absolutely. Have a good weekend. Thanks.